welcome to our sixth and final series of boosting your revenues with advisory services. I have my good friend Loren Fogelman on our phone dealing with some technical difficulties today. But today is our sixth installment of the year. I can't believe how fast the year has gone. How to make 2023 your best year ever, increasing your market share and raise your profit margin. I'll introduce Loren more formally in a minute. But she has been my partner in crime for 2 years, going on this year. So I'm excited. She'll introduce herself in just a moment. I am Jonathan Fishman, the CEO of LeanLaw. Just so everyone's very clear, LeanLaw is a financial tech workflow company focused on professional services. Our niche is legal. And what we do is help law firms today run better businesses through instituting best practices and automated workflows through their financial operations. What that really means is we help them track their time, we help them put it on an invoice, get it out to the client, collect, and report on all of that. And we have built our platform on top of QuickBooks Online, which allows these folks in the accounting community to better serve their clients. A few little things on LeanLaw, just to update. I'm going to put forth in the chat some master classes that have happened and video links to that. These are really both learn about LeanLaw, but also learn about compensation tracking, expense management, and other facets of law firm accounting. From a technical update, I'm going to show something very briefly. We're a little late, but I'm going to show something very briefly on a new feature that's coming out in LeanLaw around email improvements, emailing the client invoice, but we'll also see some exciting things happen around our invoice production and the development of a public API, meaning that LeanLaw will start to integrate with more apps, making it easier to use LeanLaw and leverage other best-of-breed tools. Look out for a State of LeanLaw webinar that we'll be doing in December, letting you know the year behind and the year ahead and all the exciting things that are happening. And I just want to emphasize the referral program that's in the works, and we'll see an announcement in the next few weeks. I'm going to share one thing really quickly with the group. I'll do it very briefly. So LeanLaw today sends an invoice that looks something like this from QuickBooks. It has a review and pay now button. It doesn't really have any pertinent information about what is happening, and we are changing that. This is the delivery from Intuit, and you can see QuickBooks.invoice. What it's going to look like is something more akin to this, allowing you, the accounting person, to help that law firm really articulate what's happening with that account summary, if there's a retaining, all that information fully automated. And when someone hits pay now, whether that pay now is straight to a trust replenishment or operating, all of the synchronicity between LeanLaw, our partner Gravity Payments, and QuickBooks, automating all those workflows. And the back end of it is here, where you can begin to customize invoice information, logos, narratives around what you want to say to your client with some automation, and then lastly, account summaries. So depending on how you want to set up your account summaries, different ways of presenting those ledger balances. And that is the beginning of other modules that we'll begin to build in there. So each law firm can have their own way of doing it. And the end result is to produce a higher quality invoice presentation so that your clients can get paid faster. All right, that was my just little quick thing I wanted to show. Just so you know where we're at, we've done these 6 series. I'm not going to read them all, but this is number 6, and it's the lead up to what 2023 will look like in terms of planning. So that's where we are on with it. So if you have any questions, the rules apply to all of this. I know some of you I can see online have been on this before. Ask questions. We're here to answer them. I'm going to start by asking Loren. I'm going to get off of this and go to stop my share. Am I still sharing my screen?
You are.
Gosh, we are having a challenging day today, technically. Resume share, stop share. Okay, there we go. My goodness, Loren, between you and me, we're barely going to get this darn thing going. So Loren, let's start by introducing yourself to the group. I know you have some of these people have known you and know who you are, but let's hear about your background. And I'm sorry today that you're on a mobile phone, so you're a little bit less than perfect, but we'll make do. And then right after that, I'm going to run a very quick poll. So go ahead, Loren, introduce yourself to the group.
Well, first of all, I'm glad I have technology options, so that is a good thing. And a little bit about me is sports psychologist turned business coach. And what I've seen is that my education prepared me to do what I do really well, but it also prepared me to work for somebody else as an employee instead of being a business owner or employer. So what I focus on and what I needed for myself, as well as what I see many of my clients need, is the ability to communicate your value. What are the right words that attract those right clients to you? Also, how to be able to enroll new clients when you might not like the sales part and you no longer want to be price competitive. You want to really have your rates reflect your value. And that's really the third thing, is being able to charge for your services so that your rates do reflect your value instead of having to compete and possibly being paid less than what your services are worth. So those are the three things that I work with accounting professionals on, is being able to communicate value, enroll new clients when you might not like the sales part, so they really see why they ought to engage with you instead of somebody else, and separating your fees and time in order to potentially earn 2 to 3 times more than what you currently earn without any additional time spent working.
Okay, here's the first poll. We're going to just do it very quickly. I just launched it, so if you could just jump in and answer. And by the way, while you're doing that, I posted 3 master classes, links on YouTube if anyone's interested in reading that. And we'll have that open for a second. And then I'm also going to post another tool that we recently put in place called LeanLaw Resources, which has a lot of these other things that we've done, our blogs and whatnot. All right, we're going to move on because everyone's done that. Looks like a lot of us have been here before. So Loren, let's get the conversation started. And I always ask this question. So the question I have for you is, how does, obviously it's planning for 2023, but instead of telling me how this fits in the grander scheme of the sequence, I mean, it's obvious, say we're going into 23, let's plan. Give me the arc of how we got here and how we're now sort of prepared to really think about 2023. And I know I didn't quite ask you that, but what's the mission? What's the mission of what we're doing, and how does that translate into what we've learned in our previous sessions?
Sure. Part of the intention that you and I set when we came up with this 6-part series, Jonathan, was to really give accounting firms what they need in order to have a highly profitable business. And we started with something very, very granular and technical, which was how to be able to price your cleanups in order to be able to earn more than if you charged an hourly rate. And then we went into some other things that were more of the overarching strategy regarding pricing your services, who your best clients are, and how to be able to attract them to you. So basically, everything is really geared towards setting up a firm that you run instead of having one run you, and also having it be where the business you have taken so much risk in building is one that actually supports your lifestyle instead of drains the life out of you.
So as we go through this, I want to kind of stage the conversation a little bit.
Sure.
As we go through this process about thinking about 2023, we're going to approach it in 2 different ways. The first is just to talk about some of the concepts related to getting ready to plan for a future year. So instead of talking about the nuts and bolts of what do I do first, second, third, it's more of the psychology, and I'm using that word, that's not Loren's, but some of the thought process that goes into it and some of the behaviors and whatnot. Then we're going to shift the conversation towards the end and actually get a little practical and give everyone a tool. So in staging that, Loren, what are the steps? And these are sort of core values of you and what you do for accounting professionals to grow a profitable firm. And one little note, sometimes you have to say something 7 times before someone realizes this. So this would be the 6th time So we're not quite to 7, but we hope
Mhm.
it sticks in. So
Right,
what are
right.
those, in all seriousness, what are
Yeah.
some of the steps that these folks need to go?
Actually, I typically talk about the raise your rates formula, which I do with my clients, but this is a little bit of a different angle because we're talking more about planning for future growth. And there's actually 3 parts to it that I think are really important. And the first thing is really understanding your firm's value and the value of the services that your firm offers to your clients. That's the very first thing, is really recognizing the value, because once you recognize the value, then it becomes easier for someone else to understand how they ought to be opting to work with you instead of going in some other option. And then the second thing is, as I was mentioning before, pricing for value, because so often accounting professionals go with what seems formulaic and low risk, which is either an hourly or a fixed rate. But a lot of times by doing that, you're actually undercharging for your services because you're focusing on what's important to you, which is time and cost and maybe some profit margin, but you're really not looking at it from the client's perspective and what is of value to them. So how to start pricing for value so that you can earn more. And then the third thing is enrolling high value clients, because there's a difference between low value and high value clients. And the more that you engage those high value clients, that means that increases the value of client over their lifetime. You work with them differently than you do with lower value clients. They respect you. It's a different type of relationship. And I really believe that those are the 3 components towards having your dream firm is, first of all, you understanding your value, being able to price for the value that you deliver to your clients, and then also being selective and not engaging just anybody willing to pay your fees.
Yeah, in LeanLaw speak, what we do is calling it understanding who your ideal client profile is. We call it an ICP, and you can have more than one, but you really should have one. And once you understand who that ICP is, the ideal client profile, then everything you do is this a high value client? Yes, relative to my ICP, this is a high value. Now, you've talked about high value having other characteristics and just what you can earn from them. That might be how they treat you. It might be the responsiveness. So value encompasses, in your language, many facets of what good is and what bad is, or high versus low. So when we think ahead, you know, how do you plan to grow? Right? Everyone looking at 23 saying, hey, you know, I want 23 to be 40% better than 22. Like, but how do you plan that for that?
Well, if Martin Luther King would have started out with, I have a goal, it would have just fallen flat. And there's a reason that he started his speech with, I have a dream instead of I have a goal, because it has a different intention. And it's something that actually keeps you engaged through the ups and downs versus just a goal, which tends to a lot of times be externally driven on things that are important, but they might not be the most important part of why you chose to have a firm and you're moving it in a different direction. On the other hand, the other thing to consider is that 63% of firm owners and business owners actually do plan what it is that they want to achieve over the next 12 months. And this is a very timely conversation. Instead of just winging it or all of a sudden think you're going to get around to it, let's make it happen. Because if you have a specific destination of what it is that you want to achieve by year end, you're more likely to get it. Similar to when you're working with a client and they give you the KPIs, the key performance indicators of what it is that they want to hit, you're able to advise them on certain strategies or opportunities to make sure that they are moving towards those particular KPIs. And I would say the last thing is that so many business plans, if they are done, they're done either because of external reasons or they're done because it's a specific time of year and you think you ought to do it. However, they're not necessarily looked at and reviewed over the course of the year. They just get filed away. And that is a great exercise, but you're more likely to actually follow through when you're looking at it at a regular on a regular basis, as opposed to just doing it once a year and then putting it in your file cabinet.
Yeah, so LeanLaw is what they call an EOS company, an Entrepreneur's Operating System company, and it's based off the book Traction. And the first thing they said is, "What's your BHAG? Your big, hairy, audacious goal?" And our BHAG is $20 billion of payments processed through our platform, because it's a goal that represents many sub goals. And it talks about the increase of clients and how much volume of activity goes through our system and whatnot. And it's like, whoa, that seems crazy, given that we're at 1 million today, roughly about 700 million today in terms of total volume of invoicing, and about 200 to 300 in payments. So we have to go and do a 10x on that, but it's over 10 years. So you have a destination. Then we set a three-year picture of the business and a 1-year plan. And we review that always on a quarterly basis, and on an annualized go through it. And so that's the cadence that works for us. Here comes the poll. The question is, what percentage of your time do you work? What percentage of your time do you work on your business? It's interesting, when I'm reading it, there's the little thing, that the header that allows me to identify it. Then there's the actual name, and sometimes you read the wrong thing. So let's give the people some time to, wow, some people do it every week. Every week, that's great. Amazing. Okay. I'm going to end this because we're short on time, but the more all of you are doing it on a regular basis, 25% are carved out weekly, which is amazing, but the majority are you on quarterly. So moving forward, this might be, to this group, this might be an obvious question, but I'm going to still ask it, which is, what's the difference between working in your business versus on your business?
A lot of times we want to work on our business, which is what it is we do today helps us to achieve what we want down the line. Similar to that BHAG that LeanLaw has for 5 years, 10 years down the road. So working on your business are the things that will actually advance your firm forward towards some potential future growth. And then working in the business is the things that you're doing today to take care of your clients, to be able to keep things operational, to be able to really keep the cash flowing in today. So the difference between working in versus working on is that working on your business is more strategic and future focused and might not be direct client contact, whereas working in your business is really taking care of your people today.
Yeah, for me, so I became the CEO of LeanLaw in October of last year, so I'm about a year into it. And LeanLaw dramatically changed as a company, and I don't want to take credit for this, it was a team effort. But now we had someone really 100% focused working on the business. I still work in the business, and certainly there was a transition, but it is amazing. And sometimes that's a decision a business has to make, which is to elevate and hire and delegate to allow more energy and time to work on the business. Sometimes you can just carve it out through quarterly or weekly or monthly types of meetings. Okay. Growth
and if any, I want to just say, because we have people here that do work on their business regularly, if they want to put in the chat, what are some of those tasks that they see as working on the business? I would love to be able to have you share that with us along the way, Jonathan.
Okay, so there's this concept that growth is often paired with this idea of like goal setting. So we have to set a goal to grow. What are your thoughts about that? Is it a one-to-one? Do they work together? Do they work independently?
When we talk about goals, a lot of times we talk about SMART goals, which is specific, measurable, achievable, results-driven, and time-based. And they were actually created around the 1980s to be able to get employees at corporate America more productive, because people were just there kind of buying their time to get a paycheck. And they believed that if they could get their employees even 3% more productive, then that would be actually something that would make their shareholders happy. And I believe that goals are better than nothing, but goals are usually externally driven, and because that they have flaws. One is that you're doing it usually for some outside reason, as opposed to a personal reason. The other thing is that they're very static. Either you are achieving your goals or you're not achieving your goals. So there's like a zero-sum game associated with it. And the other part of it is that I just feel that they're not very inspiring. They're boring. They kind of like lack some oomph because of the fact that you're focusing just on the external things about what it is you want to achieve, and it doesn't really have the personal meaning as to why you want to achieve those things in the first place. So if you're going to do something, goals are better than nothing at all. And some people absolutely love them. And if they work for you, then keep on doing those. But I feel that there are some other things that actually keep people more engaged through the ups and downs of their business.
So I'm going to launch a poll,
Mhm.
and you certainly set me up for my follow-up, which is, and we'll let people answer the poll. Is there something better than a goal? It's interesting. When you were saying that, I was thinking about a goal being metrics, and I was going to advise that what's very difficult for people, what's very demoralizing for businesses to do top-down forecasting. What I mean by that is we want to be $1 million. So what are the behaviors that we have to do in the organization to be $1 million? Versus looking at your existing behaviors, understanding what those are, saying, well, what number can we achieve? That's a much more attainable and exciting goal than just setting out some arbitrary number, because in most instances, you never reach that number. And that's something that LeanLaw shifted. Okay, so I'm going to close the poll. It's split kind of down the middle. A bunch of folks have some organic growth. A few created a business plan and started it, but they of course need to tune it and work it. And some folks are just every quarter they're on their plan and adjusting. So good for them. So Loren, you talked about goals aren't great; they're better than nothing. So what's better than a goal? There's your setup.
Okay, Jonathan. I used to do a webinar called Goal Setting is Killing Your Success. So actually what is better than goals, I feel, is that strategic plan, because it's more adaptable, it's flexible, it's something that you can really look at over that quarterly basis, and make sure that either you're on track or making some changes. Because what I see is that as you're moving forward with your business, you become aware of things that you didn't understand or even realize were a possibility when you first set out those goals. And if you're doing goal setting, then it's very static. Either you're working towards them or you're not working towards them. Whereas with the strategic plan, it has more flexibility to allow you to make some adaptations as well as course correct along the way. And once again, it's similar to Martin Luther King's speech. He had a dream. He didn't have a goal. And there was a very, very specific reason why he chose that particular phrase, and that was something that really inspired an entire movement for our nation.
Yeah, it's interesting because you're talking about goals and strategic plans. And when you talk about strategic plans, just to share a little glimpse of what happens in LeanLaw is that we meet. So we're moving towards a place where everyone in the company has a number, something that they can measure success on. And every week, the management team meets and goes through a dashboard across all facets of our organization. And it's an iterative process to try to get the right data point that reflects the health of that aspect of the business, right? And that process, it's been so educational for the organization to drive towards a single dashboard of, it's probably about 15 numbers, 20 numbers across engineering, customer success, sales, capitalization, et cetera. But the one thing about having a strategic plan is it allows you to then break it down into the components of success. And from there, I firmly believe that every organization, from the lifestyle, bookkeeper to a bigger organization, should try to find those numbers. And I know numbers aren't exciting, but they do help you measure success or failure, that identify progress. It's not success or failure. And I think that gets into what you're talking about. It's progress. Because if you get too caught up into, well, we didn't meet our sales goal, we failed. Well, that's not the right way of looking at it. So what does progress mean like? So we use often a trailing 4-week average. So we're just trying to get the average up, right? And so we're looking at 4 weeks versus getting too keyed up on 1 week of activity. And we go through that process every week.
And I'd like to expand upon what you're saying, because this is one of the main key differences between goals and a strategic plan. A lot of time a goal is created from where you are now, and you're looking forward to where you want to be. Whereas I see the strategic plan being reverse engineered, and you're focusing on where you want to be and then looking back to where you are now. And by doing that, you're looking at it from a little bit of a different perspective, and you might see some opportunities that you wouldn't look at it from where you are now. It's similar to how accounting firms often build their businesses, is that they're putting in software technology or additions to their team based on their current capacity and what they're currently doing, instead of possibly making some decisions versus where they want to go and putting some things in place for their future growth.
Yeah, an entrepreneur told me something this past week that I'll share with the group. Every decision should ideally have a 2x. And what I mean by that is that it meets the need today, but as the business grows or the capacity grows, the architecture of the decision should grow in a 2x, whatever that 2 times growth is, so that you're thinking, okay, when I buy this, software tool, when I hire this person, do they have the capacity now to do 2x versus 1? The other little note that I'd say on what you just said, which I think is important, is you said, okay, think about where you want to go and reverse engineer it, right? And I think that's understand where you want to go. I would caution reverse engineering it and maybe think of it as, how do I build from what I'm doing today based on what I know about my business, instead of going top down? When you go top down, the risk is, and we see this a lot in my types of businesses, is that essentially they're making up equations of conversion, equations of behavior to meet a number, versus looking at where you are in your proven practices and then quantifying out, how do I get to that number? So let me give you an example and then I'll move on.
Sure.
In our marketing budget, we now know the conversion from a website impression to a lead to a marketing qualified lead, a marketing qualified lead to a sales closed win. We know those numbers, we have enough data. So when we think about where we want to go in our forecast, we use those conversions to say, based on these conversion numbers, I can get there. And that's fact. So there's less risk. I shouldn't say there's always risk, but there's less, it's more being done from a place versus us saying, which we had done historically at LeanLaw, which says, we're going to be $5 million. Okay, how many deals do I need? Okay, how many clients do I want to do? So it's just, there's a finesse between those two things. And I guess the last note is, information in your own business as to how you operate mechanically. And those can be very insightful, of looking at the bottom of your funnel to then go back to the top of your funnel to understand what behaviors have to change to scale to get to that revenue number or get to that road. And not every strategic plan is about revenue. It can be a lot about lifestyle in other ways. Okay, let's keep going. So this is shifting now. I talked about the beginning was sort of the setup. Now we're going to get a little bit more practical about how you get into planning. And if there's any questions from the group, we're listening. If not, she and I will still keep talking. Neither of us have a problem with that. So let's drill down from here. So let's just start, how do we get going? Where do we start?
What I believe is that the money is important. We're all on the same page, but it's also that story behind the money that is important. So think about, if you were able to achieve those metrics, whatever that might be for your firm, what would be possible? What would be different that is not possible or happening today? And some of the things that I love to get behind with my clients is having more flexibility for their family, being able to travel and work from anywhere in the globe, funding their retirement, building a church for their church, and then someone else wanted to pay off their mom's mortgage as a retirement gift. But those are the things that I've seen that really are inspiring people to make some of these hard choices to grow their firms very strategically, is that it's not just about the money and the revenues, it's also about how their firm enhances their quality of life, as opposed to continuing to take from their quality of life.
Yeah, and I mean, LeanLaw actually has one of our core values is, there's a piece of it that says, and everyone can go fishing for a day. And really what it means is that we always want to promote life-work balance, and that's a core tenet of our vision. So everything we think about, like we have an unlimited time off policy. We have a certain amount of holidays, even when I personally don't like that LeanLaw support is on holiday. We are, because that's our core values. And it's not the same thing that you're talking about, but it is in this essence of prioritizing what you as an individual, you as a company think is important, and wearing that in your strategic plan, building it in how you go about doing it. So what are some of the additional things that that these folks need to consider when they're getting going and creating that strategy?
Sure. There's actually 4 parts to the things to consider when you're starting to look at building your firm very strategically instead of organically. And I want to just define the difference between organic growth and strategic growth right here. Is that organic growth is really your clients make requests, and then you're doing those things for your clients because it increases the value, you can bring in more revenue, but it's growing your firm based on client requests, as opposed to having a certain intention of what it is that you do want to offer and what you don't want to offer. And that's the more strategic growth, is you become very clear about your lane, and that when requests are coming to you, opportunities are coming to you, you are deciding whether they fit within the growth that you want and your plan, or if it's maybe something that seems good at the moment, but it distracts you from that longer term vision that you have. So that's the difference between organic and strategic growth. And so some of the things to think about is that vision. It's similar to a destination that you put in your GPS. Where is it that you want to finally arrive, and what does success look like for you with your firm, whether it's 12 months out at the end of 2023, or it's maybe 5 or 7 years out. For example, just today I was talking with someone who wanted to be able to hit a certain revenue goal in 7 years, because she's looking at her exit strategy at this point, and what are some of the things that we could do together to achieve that. So that is really understanding what the destination would be for you. And some of the things to think about when you're looking at that vision is, what would your firm look like at that point? How does it support your lifestyle? And what would be different or possible once you achieve that milestone with your firm? So that's the first thing, is your vision. And then the second part is the strategy. And this is the milestones. So if we're looking at, let's say, 12 months out, the end of 2023, then I suggest having milestones you want to hit every quarter. And then as you're getting to like that 90-day out, even break them down even more to 30-day goals, weekly goals, so on and so forth, similar to what you were talking about that you do with your team, Jonathan, as well as some of the people joining us today, looking at their plans on a weekly basis. So really continuing to review where you're at and maybe where you need to make some adjustments to continue to make sure that you're being mindful about what you're saying yes to and where there might be some distractions. The third part is the action steps. This is where you have to get out of the planning stage and actually knowing exactly what steps you want to be focusing on. The interesting part here is, even if you put down some action steps for 90 days out or 6 months out or 9 months out, those are really maybe something as a guide, use them as a guide, but things change. So something to think about is working a strategic plan, in my mind, is similar to the GPS. You put the destination in the GPS, and then you just get the direction that you need right now, and that's it. And then you get a heads up of what the next direction is going to be coming up down the road. And with a strategic plan, all you need to really focus on is the one thing that's happening right now that's going to start to move you forward. And then when you achieve that, then you move on to the next thing. And a lot of times that's because there might be some things that come up that you don't even realize you ought to be doing or are an option for you. And so you want it to be fluid and flexible. And then the fourth part is the community, that you're more likely to achieve these things when you're surrounding yourself with other people who are moving in a similar direction, because there are questions coming up that you might not have the answers to, and being around other people will help to give you those insights. So those are the four things: is the vision, the milestones, the strategy, and I'm sorry, the vision, the strategy, the action, and the community.
Okay, I think this is really important. I put 2 links in the chat for the group on what LeanLaw uses, and as fellow business owners, I think this is the most monumental change to my business was when we adopted this EOS mindset. And I'm not suggesting this is right for everyone, but it was built off the book Traction, and you'll see a link to both of those in the chat. And it does exactly, it just puts structure on exactly what Loren's talking about, which is what's our 10-year, vision, what's the 3-year picture and the 1-year plan. We then take the 1-year plan and we break that out into quarters. And each quarter we have what are called rocks. And rocks essentially are the thing that we're going to do that moves ahead the objective. And it's either on or off. And we typically take 3 to 7 rocks per individual. I have 2 this quarter. So less is more here. And it delegates down through the organization. Everyone has a rock and it's all moving towards the same uniform goal. And every quarter we take a day off and we go through, and we look at the quarter, and it's all tied together with issues. And issues are clear things that are either updates or wrong with the business, both short-term and long-term. So every week we get together in a cadence and we go through what's called an L10, which is a meeting of the management that says, are we on track with our rocks? What to-dos from last week that didn't get done? And essentially, what's our data and what are the issues that we need to address? And it starts every day, every time Tuesday at 8:30 and ends at 10. Everyone shows up. No, it's never missed. And the point I'm making is by adopting a methodology, it helped the whole organization operate better, and it allowed new people coming into the organization actually work smarter because they knew how we worked. They knew exactly the rhythm, the cadence to everything we do. So I put that in, and I just wanted to share that because it is so critical that Loren's talking conceptually about what's important in community and things like that. But for LeanLaw, it was actually having the tool that really facilitated. Okay, so Loren, I'm going to jump ahead here and jump over a poll a little bit and talk a little bit about, we're going to talk about a 3X strategy, but I want you to talk about the strategic growth plan, and I'm going to put the link right now to the plan, which is the plan is the tool, right? That's a self-help tool that folks can use, right? That's what this link is?
Yes. So basically, if you're really looking to apply some of the things that we're talking about here, and I believe, Jonathan, that you and I are actually on the same page and very complementary with what we're talking about. Just maybe a little bit of a different perspective, which is great, is I put together a strategic plan that you can map out on your own for 2023 to really get started. And it has you start with the end in mind, and then it works backwards to where you are now, reverse engineering, so that you can have what Jonathan calls the rocks, I call the milestones. So very, very similar. And you can go ahead and get that free resource to start mapping out your strategic plan for 2023 at businesssuccesssolution.com/plan.
Yeah, that's I did put that link in there.
Thank you.
And so, I think we have time we have 2 more questions lined up, but I think we have time to do the first one, which is, we talked about the structure of it. You talked about the mindset of it. You talked about the sort of idea of the different aspects of strategic planning. You actually gave them an instrument that says, here is a tool to do it. But we haven't really talked about, like, what happens when you hit a wall? Like, what happens when you're just like, you're so in the business, you can't work on the business. And, you feel like almost a mindset of, geez, I'm failing, because I've felt this. I mean, I can tell everyone in this audience, I have felt this, like, heck, we're not moving this company forward. So how do you coach people on that?
Sure. And this is definitely the mindset part also, because growing your firm in a very specific way is tough. And eventually you will hit a wall. And it's actually something that I realized from sports psychology, and I was also competitive rowing, but this applies to growing your firm also, because the fact is that success is messy. And something to think about is you're going to hit your wall and you're going to respond in one of 3 different ways. The very first type of person hits the wall and they just say, I give up. I can't do this anymore. I'm going to go back to my day job where I got a steady paycheck and it's no risk to me whatsoever. And things were okay. They weren't quite perfect, but they were okay. They're going with good enough and reducing the risk for themselves. And I call those people the retreaters, because as soon as something comes up that is going to challenge them or stretch them, they just revert back to their comfort zone. And then the second type of person that once again runs into that wall, they go ahead and they slam that wall and they step back, they do more research, they come up with their game plan. And once they have more insights about how to be able to move forward, they mitigated risk, it feels like more of a sure thing of what to do. Then they go ahead and engage once again on moving towards that particular growth that they want. And I call those the marinators, because they need to let things sink in a little bit before they get back on their journey. And then the third type of person also hits that wall, and that particular person is looking anyway around it, above it, through it, anything necessary to keep on going. And they're just making course adjustments as they continue to move forward. Those are the people that we tend to look up to, the top 1%ers of firm owners, of people that we admire, that we listen to. And I call those people the implementers, because they realize that it's like compounding interest. If they continue to put effort in and move forward and make adjustments along the way, they're going to be further along at a faster pace than if they had starts and stops, because the starts and stops actually take energy to get that momentum going again. Whereas the implementers, they're just making the course corrections as they move forward, and it doesn't take as much energy. So that's something to just think about, is challenges will happen. This is not the easy thing. If you wanted the easy way, you would have continued working for somebody else, but that you will hit a wall, and sometimes you're going to just give up. Sometimes you're going to go back and plan for a while before you move forward. And then other times you're going to be really inspired to just keep on going, and you're not taking no and obstacles as a reason to stop or distract you from what it is you're focused on doing.
Yeah, I mean, that resonates with me, because I don't retreat often. I might procrastinate, but I don't like to retreat. But I certainly sometimes marinate, and I tend to implement. And I will say this, in my job, I get a lot of rejection, because I'm talking to investors and third-party folks, and they have an idea of who I am, and because they have a formula of what they're looking for. And when we don't meet that formula, it's a bit of rejection. And it's not because of our greatness and our awesomeness, it's because we're not aligned. And the one note that I would give to everyone that we're going to talk about as you think about these implementation strategies is that think about what's stage appropriate. When you think about your behaviors, the staff you hire, the things that you do, is it stage appropriate for where your business is today? I think LeanLaw has fallen prey to this, is that we think we're further along, or we think that if we bring someone who has more experience because they work for a big company or did something, that's going to be impactful in your business. But the truth is, you're always trying to talk to people who are stage appropriate, meaning clients that meet and align with who you are, where you are at your stage. It doesn't mean that you can't grow with them. Vendors that are there to meet you, staff that you bring in. It's been such a key learning. And that goes back to sort of, the implement mindset, which is when you recognize that that person's not stage appropriate to me, or that investor, and he rejected me, it's not about me, that's not stage appropriate. We weren't aligned. He's looking for a different type of customer or client than I am. And so, of course, it's going to be a negative. It has nothing to do with LeanLaw. Anyways, just think, I can't encourage everyone enough to think about all the behaviors they do. Are they stage appropriate for where my business is today? Doesn't mean you can't be thinking ahead, but don't expect someone who's a later stage expert to be effective in your organization, because they don't know how to do early stage, or they don't know how to do where you're at. Anyways, that's a startup-y, software-y kind of concept, but I think it's applicable. Loren, so how do you use this plan that you shared and some of these mindsets throughout the year?
Basically, it's what I call my 3x3x3 strategy. What you want to do is realize, first of all, goals are very static. This is a strategic plan, which means that it's flexible and adaptable. When you first created it, you might not have known some things or been aware of some things, or maybe something shifted because of your journey forward. And that's okay. So the way that the 3x3x3 strategy works is that I want you to become aware of the things that create drag. And those might be people, places, or processes. I will let you know as your firm grows, especially as we're looking at 3Xing it and maybe even more, all the processes that you have in place now will probably break down because you created them for where you are now, and they might not have the capacity for where it is that you're going. So you want to, on a regular basis, look at those things that create drag. As far as the people, it could be clients. You might have clients that were a great fit for when they first signed on with you, but aren't a great fit for where you're going. Or that could be employees. You might find that you have some employees that actually add to your workload instead of help to remove things from your workload, so you can grow on, focus on those larger business development things, or working with your clients at a higher level. So that's some of the things to think about, is the people, places, and things that create drag. And with that, every 3 months, you want to go ahead and identify 3 things that actually are energy draining, or they create that drag, whether it's people, places, or processes, and focus on eliminating those 3 things from your agenda or what your firm might be offering. And as you do that, you also then, during that every 3 months, want to focus on really putting more energy and effort into 3 things that are strengths-based that are moving your firm forward. So that's really, in a very simple way, the 3x3x3 strategy is every 3 months, you look at eliminating 3 things which create drag, and you put your attention on 3 things that are moving you forward towards what it is that you want to achieve. Similar to what you were saying earlier, Jonathan, where right now you have 2 things that you're focusing on. But you know that those 2 things are very strategic and were chosen for a particular reason because they're aligned with what it is that you want to achieve by year's end.
Yeah, you'd be shocked. I mean, we would create it. We call them rocks. You might call them milestones, KPIs, whatever they might be. How that you're just 100% certain in that offsite that this is the most important thing, and you phrase it this certain way. And 3 months later, you're like, what the heck was I thinking? That was totally wrong. And you just, it's okay. Right. And then the greatest coaching tip that our facilitator gave us is he stops us at the end after we review what happened, and he stops and he says, okay, let it go. A new quarter is ahead. And it's a really powerful thing. And this, I just think what you're talking about here, Loren, is so critical to stop and think about what is draining and what is charging. And I will tell you this, it is very, when it comes to divorcing clients, firing employees, changing strategies, the thought of doing it is way harder than the act of actually doing it. So you put so much time and effort into the idea, should I get rid of this person? Should I fire this client? And it drains all this energy from you. When you actually end up making the decision to do it, you're like, well, that wasn't that big of a deal. And oh my gosh, it didn't have that big of an impact. And I've seen that happen in my own business. Okay, so Loren, we always end this. I'm going to put up a link. So if people,
Thank you.
You've shared a lot. And if folks would like more, what do they do? I'm going to put this link in because I know you have a link. You have a retreat coming up or something of that nature. Why don't you tell us about it?
Absolutely. Every year, right at this time, around November 9th and 10th of this year, I'm doing a strategic planning retreat. It's all virtual. It's 2 half days of live group coaching, hands-on. We roll up our sleeves, step away from working in your business to work on your business, to really carve out what it is that are those important things to be paying attention to in order to really take charge of your firm and move it forward in a very strategic way towards where it is that you want to be. So like I said, it's a very small group, and it's 2 live half days on November 9th and 10th from 1 to 4 p.m. Pacific, which will be 4 to 7 Eastern. And you're going to walk away with knowing exactly what the big picture is, the milestones, how to be more intentional with your time, what it is that you want to be focusing on, what are some of the things you've been tolerating or create drag that you want to let go of, as well as many other things that are put into this. And if you feel that that inspires you, then please go to businesssuccesssolution.com/retreat. All the details are there. And the investment for getting 2023 dialed in and getting the ability to really kind of fine tune that strategic plan is $500 for the 2 half-day for the retreat. So, and if you have any questions, let me know. I am happy to answer those questions for you. But
Yeah,
if you know where you're going, absolutely makes a difference. Go
well,
ahead, John.
Lloyd, I was just saying, I just put up a quick poll saying if you're interested in talking to
you.
Loren. So I have that poll there, and that's a different way to engage. And based on your responses, she'll respond. I have one last poll for the group, which is a simple rate this webinar. Loren, I've so enjoyed this year and this series with you. Thank you for your collaboration and your friendship. It's such a fluid and fun conversation. So thanks for what you do, and thanks for participating in this. Hopefully some folks will just that one last poll, and then we're off. And I wish everyone a good finish to the fourth quarter and a good 2023. Okay. I am going to, I didn't launch it. That's the problem.
There you go.
Why is no one doing that? Again, we end the year with lots of technical shenanigans, but we overcame them, and we made it happen, and we'll finish before the end of the hour. So I think that's pretty impressive. I'm going to close the poll. I'm going to thank those for attending, and I wish everyone a great day. Take care, Loren. Talk to you soon. Bye-bye.